Welcome back, ladies and gentlemen. Don't forget to hit the like and subscribe button for more Sofi stock. That lets me know that you want to see more videos from this channel with regards to SOFI. Right now, as I pull up the monthly chart, you will notice something very interesting. You'll notice the stock came down as low as 424 in this bear market. During the bull run, it came up as high as almost $12 before finally pulling back as low as 650, where insiders continue to load up the stock. Now, what I'm going to point out is if we grab our drawing tools, and I'm going to mark a line here. I'm going to mark a horizontal line right at $7, and where is it? There it is, $7. Okay, so this video we're focused on calculating how much return for your money if you were to buy SoFi stock every time it goes under $7, where insiders continue to load up the stock. Insiders, the CEO himself continues to load up at 650. Let me pull that up for you guys so you guys don't think I'm just making things up, because I like being transparent here on this channel. So don't forget to hit that like button. Let's see, insider trading SoFi. Yeah, Anthony Noto continues. He's always loading up the stock. I don't know if he knows it. I think he, I don't know if he himself knows how to trade or what, but he continues to load up every time this thing dips to that low of 650. But here we go. Where is Anthony Noto, CEO? 614, a buy order at 648. Anthony Noto, buy. He continues to load up anytime it goes under $7. So that's why I'm saying, what if the CEO is loading under 7, it must be a profitable strategy. Let's make the calculations here on this channel. So since the stock's existence way back here in 2020, the stock eventually did come down as low as $4.24. It did come under 7 at that point. So let's just assume you accumulate, let's see, for the sake of math, let's say you buy, every time it goes under $7, you buy, let's say, 1,000 shares. Just let's not go crazy. Let's pretend you only have, I guess, $10,000 to trade with. So you buy 1,000 shares under $7 every single time it goes under 7. Came down under 7 here. You bought in, came up as high as, let's see, came up, I gotta move that over here. There we go. Came up as high as $8.40. Comes down again under 7. Came up as high as $8. Comes down again. Comes up as high as $10. So just to make the math easy again, you buy 1,000 shares at $7. Okay. It goes up to $8 every single time. That much is clear here on these wicks, on these candles. The one time it did run to 11. But we're going to assume that you just take profit at $8. You're content with the $1 per share gain. So you're content with making $1,000. So you buy at 7 and sell at 8 every single time. You sell at 8, that's 8,000 minus the 7,000. Easy math. I'm just showing you guys for the sake of, transparency. $1,000 is what you make. So you made 1,000 here, 1,000 when it came back up here, and then you bought in again because it went under 7 again. Guess what you do? You buy another 1,000 shares, ran up as far as 1160, but let's again assume you keep selling at $8 only because you're content with that. So we're assuming that you're actually making less than you probably would make if you didn't just sell at $8 every single time. So we multiply 1,000 by 3 because that's already 1, 2, 3 times it's ran up and made you money. That's $3,000. Again, this is assuming you're trading with an account of less than 10K. Literally less than 10K. Okay, so it runs up as high as 1150. You don't buy the top. Obviously, we're not stupid. We don't buy tops. So you would never even buy down here. This is why you have that rule in place. This is a rule in place where you only buy SoFi like Anthony Noto buys. You buy it under $7. Because if the CEO thinks it's a steal, then we should assume that's a steal too. Let's buy in. I don't know if he himself is just a really good trader or what, or he just believes in his company that much. But so far, it's been very profitable. Okay? Now it comes back down under 7 here, briefly, where the CEO bought the dip, and then it comes back up to 10. Again, we assume you only sell for that $1,000 profit. That's $4,000 so far. It comes back under $7 here, and then it goes back to up to 8, so that's already another 1,000 right there. And then finally it comes back down under as low as $6.15 and comes up as high as $7.60, where it is sitting right now. It's currently sitting at $7.60. We haven't sold yet at this point. We're still holding 1,000 shares at $7, and we're up 60 cents on it. If we're just going to use the strategy and we only sell at 8, right? So we hold until 8. So at this point, it has not come up as high as 8, unfortunately. But hey, if it does come up there, that's another 1,000 on top. If it doesn't and we go down to 4, guess what? In this bear market, the stock came down as low as $4, and it still recovered as far as almost $12. So that's 300%, almost a 300% move from that bear market bottom. And that's why I'm telling you guys, this stock, because it is going sideways over the long term, very clear sideways action here. This is April 1st, 2022. You can see it down here, April 1st, 2022. Since April 1st, 2022, we have been going sideways for all intents and purposes, between 4 and 12 over the long term, over the course of the past 2 years. So with this data, we can take advantage of this and use a strategy where let's just buy with the CEO under 7. I don't know if he probably doesn't set a stop loss, right? Because he doesn't really sell. He hasn't sold under his buy-in point. They probably hold, right? Like, they're not going to sell at a loss unless they're stupid. They always hold and sell when it pops, is what I've noticed. So if we're going to follow the Anthony Noto strategy, or whatever you want to call it, the CEO, follow the CEO into every one of his trades, we buy under 7. You can buy 7 on the dot. You can wait for 650. It's on you. But we're just assuming a very rigid algorithmic type of trading. So we buy at 7, we take profit at 8, no stop loss, just like the CEO, and we just hold. And when it goes to 8, we take our profit. That's $5,000 right there, assuming again you're only trading with $10,000 or less. So that's $5,000 over the course of what, 2 years? Yeah, over the course of 2 years. That's $5,000 over the course of 2 years. A little over 2 years, but let's just round it down. Over the course of 2 years, that's $5,000. That's $5,000, and you started with what? $10,000, let's say. That is 50% gains on 50% return on your money just for following the CEO into his trades, or just for trading like an algorithm and just waiting for $7, buying in at exactly 7 and selling at exactly 8. But like I said, that's assuming you trade like an algorithm. If you decide to hold for 9 or 10 or 11, you can obviously make way more. But the point I'm trying to make is this is very profitable over the long term, because we got so much history here, 2 years worth of history. Seems to me like anytime this thing goes under 7, it's a buy. And the CEO buys down there. So it's looking good if you ask me. And that's why I'm giving this the bear market buy rating. If this goes into a bear market, absolutely load the F out of this stock, because there's a lot of money to be made if this goes into a bear market. For the time being, though, take advantage of this trading range and just buy under 7. Buy when Anthony Noto's buying. And again, that's just assuming you're trading with less than 10K. If you're trading with 100K, if you have 6 figures worth to trade with, you're obviously making 10 times as much. So that's an extra 50K in your pocket over the course of 2 years, following a very algorithmic strategy that is based off of just buying when the CEO is buying, because he buys the dip at 650. But we're assuming we just buy at 7 and sell at 8. But that's just 50% return. That's not bad. That's not bad. So there's the math for you guys. This is how I see the market. Maybe you see the market differently. In the description below, I will leave a Word document, pamphlet, whatever you want to call it. It's free. I created it for the premium Discord, but I'm like, you know what? It's so short. It's 14 pages long. You could read it while taking a dump. And I just tell you my thought process and how I perceive the markets. So if you want to read that, go for it. Free to download. That's it for the video, guys. Don't forget to like and subscribe if you want to see more data like this. I will see you in the next one. Again, feel free to adjust the strategy. I'm just giving you a very algorithmic strategy based on where the CEO buys. And he tends to buy under 7. So, all right, guys.